Ajay Shrivastav, CEO at Dimensions Consulting, as well joins us on the show right now. Ajay, just looking at the fall in the markets the last 3 days, Nikunj and I are wondering whether to consume USL products or buy into the stock.
Well, I think the bottom line is both. I think the critical here is, when you are in a panic situation like this, you not to differentiate between what you're holding because it was moving on momentum and what you're holding because fundamentally you believe in the story is a long-term story for the stock. This is the time to really be harsh on your portfolio and say, lots of stuff I bought because the momentum was very good, it was moving up, and I need to clear the thing out if you can, because I believe a lot of stocks, my guys tell me, are at the circuit filter, so you can't get out of it. But if you can, I think this is a good time to clean up your portfolio. Number two is, this is not a short-term global sell-off related phenomenon as most people think. It's also largely domestic because we got knee-jerk by LTCG, which was expected, but well, whatever it is. But I think the biggest knee-jerk was the fact that we lost revenue momentum in our economy in the year global economy was at its peak. So what does it tell you about the next 2-3 years, or at least the next 12 months, that how can we recover from a situation where global economies go a little bit of a wobbly, but we will be, how do we survive this state? So I think the revenue deficit kind of spooked everybody that the price of demonetization, etc., is now filtering through the economy. And I keep saying this, my mom used to say, who's no more, that, India mein kehte nazar lag jayegi. I think the curse of the informal economy has hit us very badly. While all of us making tremendous amounts of money, there is a large part of India which was struggling for employment or even survival. And I think that's the important part which has come through in this budget is the fact that we are structurally have a serious problem in the economy. If you look at even the defense forces, the pension budget of army is more than the current salary budget. Now, how can that happen? There is no money left for capex. A lot of budget money will be raised through off-balance sheet debt, etc., from NHAI and other corporations. So you're going to see lots of debt hitting the market. You're going to see interest rates have already bottomed out. I think they will only go up from here. So when you build into this scenario and you start investing, you start to have faith in your choice of fundamental stocks. Do not panic. These things will come. We have seen so many of them. We have seen 2008. What worse could you have seen, right? So I think this is the choice. You've seen the results. Some results have been spectacular. Some results have been good. Some have been pathetic. I think you need to sift the chaff from the grain and sit with your portfolio and stick tight. And I would say we are buying some stocks today morning. I will buy fundamental stocks any day, irrespective of what the market is doing.
That's a fair point, Ajay, that you should buy what you understand and when you think it has reached your perceived valuation. But my only, and I hate to sound that bearish, I mean, even though I'm an eternal bull and I've been criticized for being an eternal bull, the internal bull in me is today confused because I've seen global sell-offs in the past, and globally when you get hit hard locally also.
Of course you will. Of course, nobody's denying that. You're absolutely correct. When we get hit globally, there's nothing can save us in India. But the point still remains, at the end of the day, in all the carnage, you will find that good quality companies will outperform. You may not get the returns in the short term that you were used to getting, but eventually this will come to fore. Sure, the question is, can I buy it cheaper? I guess the answer is yes. But I don't know when it'll become the flat out, the market will bottom out. But really the key question is that this is the time to churn out. Your first step is kill the portfolios which were just on momentum and no fundamental. I think that's the first step. Second step is start building. I still believe that yes, globally we'll have a lot of issues, but globally we don't have a growth issue. Europe is coming together. I was in Europe. They are coming together very well. UK is coming together very well. I don't see a growth issue. I think you were alluding to a growth being possibly peaked out. Maybe you're right, but I still think that 4% growth of a US economy or a 3% growth US economy says a lot about the world economy. So I don't think we should be too worried about growth. I think we should be India too worried about our interest rates going haywire in a very short while in an election year. That's one. And last point, very simply, there is an electoral arithmetic at work in the stock market. People are nervous, investors are nervous, the invincibility aura is in doubt, and therefore political uncertainty will have to be built into your portfolio as you go forward in the next 6 to 9 months. And I think, people are not saying it, but involuntarily is impacting their mindset as they invest in this market.
You know, Ajay, today we are talking about global cues. After 6 months, let me assure you, everybody will start talking about 2019. The minute you start talking about 2019, there's a political dimension which these markets will have. So if I look at the sequence of events, I am not so sure if markets are realizing that the next general election is less than 18 months away, and 18 months is like here.
Well, all news says that it should not be even 18 months. We should be talking about 7 to 9 months, and everybody goes to election mode at this point of time. So it's not going to be 18 months, it's going to be 7 to 9 months. And which is why I was saying that involuntarily people are now addressing that issue in their portfolio choices, allocations, and investment strategy. And you know, the problem here is, for most people, is that where do they go with the money? Because if you go to debt funds, you're going to lose money. Interest rates are going to go up. There is no particular mechanism to capture a hike in interest rates. You can capture the drop in interest rates, but how do you capture the hike in interest rate? That's a conundrum, which means keep your money in fixed deposit or short-term, very short-term funds and wait for the interest rate to rise up. I'm not sure 7th February credit policy is going to increase the rate, but definitely the next credit policy is going to increase the rates in India. So we have seen the end of the short-term money rates. But again, back to the point, you know, people will still use airlines, people will still use airports, people will still do lots of things, people will still do travel, and I saw the Thomas Cook results, spectacular results, absolutely. So when you look at the underlying fundamental of an economy, or any economy for the matter, you will find that certain things will be used irrespective of state of the economy, maybe a little higher, maybe a little lower. I think it's time to gravitate your portfolio to those stocks and earn a decent return out of it. May not be spectacular, but well, all the equations may go off if political changes in this country don't give you the result that capital market thinks it should be getting.
Don't even talk about that, Ajay. We shudder to think what's going to happen if that were to be the case. So from now up until the run-up to the elections, which, you know, like you rightly said, rumor has it that it could be as early as 7 to 9 months perhaps. How is it that you build your portfolio? Do you continue to get your shopping list out on every dip? Is that what you're doing right now as well? You said that this morning too you're looking at buying stocks. Where is it that you're shopping?
See, as I said, you know, first line fundamental thing is, are the companies doing better than what they were last year? And I think that's the fundamental line. So lots of companies, I think one of the airport companies we are buying into at this point of time, one of the airline companies we have bought into and continue to buy, one of the travel agent company we're buying in. Liquor, you know, is my favorite. I will buy every correction of liquor at any point of time. So every time it corrects, I keep saying buy it. Don't buy always at the top. Keep a cushion, buy at the bottom. You will get those chances. I think you're buying those. I think you're buying fundamentally things which are going to be in the electric vehicle side, because government will expedite those orders. We are buying some of the things which are on the steel pipe side of the economy, because there will be some spend which will happen in the first 6 months. That is what we bought. We bought 2 or 3 private banks, and you know, these are, again I keep saying, this is not the scenario to sell off your HDFC and HDFC Bank ever. If you get a chance, decent correction, you add to your portfolio. So don't sell off your family jewels like HDFC Bank and the twins, etc., because something dramatic has happened. And for the off chance, the government gives the largest to the insurance companies, buy the health insurance companies, because they might get a huge inflow of premium in the next 6 months. So I think this is roughly a shopping list on which we are working, and for the investors. And essentially the concept is same, that 60 to 65%, which I've been sharing for the last 1 year, is all in large caps. 20-25% is still in mid caps. You know, you may call a 500 company mid cap or thereabouts, but I don't think anything much goes towards companies with a turnover of 100 crores and below.
Always fantastic to have you. And liquor it is. And liquor is Ajay's favorite theme.
Thank you so much.
And like a true Dilli wala.
Like a true Dilli wala. Dilli wala ka winter wala.